Hey everybody, we're getting ready to trade October week 2, 2019. We're taking a look at the S&P 500 and talking about the simple moving averages. And this video is meant to go along with the blog article that I'm posting together with this video. That blog article was written way back at the beginning when I first restarted the private account. And hopefully by now, everybody has read that and maybe even gone back and read it a couple times, believe it or not, because this is probably one of the best tools that you can use as a trader. This is where order flow derives from in probably 90% of the cases. You can beg to differ on that all you want, but you can probably go back and compare quote unquote order flow levels on ES with simple moving average levels on the S&P 500 and find that they are similar or have to do with days where the simple moving averages were broken or popped over and so on and so forth. And simple moving averages, it's not just about reading whether we're above or below a specific simple moving average. It's about the direction that the lines are traveling, where they are in position to the others. Are they crossing up above one? Are they crossing down below one? Are they ascending? Are they descending? And anticipating one of the greatest ways that you can make money, and positioning yourself properly or knowing if you're kind of wondering whether you should buy a dip or not, is looking at where these are in position to the others, and are we headed for a cross that's going to be bearish or headed towards a cross that's going to be bullish. So I just want to sort of go over that because we just had one of the greatest weeks I've seen in a long time where everything just fell into place perfectly and played out exactly on the moves that price made around the simple moving averages this last week. Okay, so let's starting off with the S&P 500 chart with everything removed and just the simple moving average lines. And you can see how what has been going on here, what has been going on since we made the all-time high in July. You can see here's where the 10-day crossed down through the 20-day, and boom, we had a big sell-off. Our first leg of the sell-off was so severe that by the time the 10-day got down all the way down to the 50-day simple moving average, we had already put in the low for August. And you can see here we made a bounce to try and fend off this cross that was coming. Look at this huge 2-day bounce that we made here in August, trying to fend off what was coming, this very bearish 10-day down through the 50-day. Well, because this first leg was so severe, yes, we did sell off, but we sold off all the way back down and held a higher low, and we wound up chopping and chopping and chopping until we got here to the very first trading day of September, and lo and behold, what did we get? We got a gap up open and then another gap up open. And what did those gaps do? They changed the trajectory of the 50-day simple moving average. We floated price well above the 50-day simple moving average for the entire month of September. And then just as we started to roll over a little bit here on the 10-day simple moving average, you can see it all started here with a first break below the 10-day simple moving average since we had started trading here at the beginning of September. Okay, so let's take a look. Let's take a look at these things in terms of what happened last week. And here's that same chart, but in close-up. Here was that first trading day of September, and here in close-up you can see how the low of the day poked its head down through the 10 and the 20-day, but came back to close well above that pair. And then the second day was a gap up open to take out the 100-day, but we couldn't quite get enough buying going to take out the 50-day, so we came in with an even bigger gap up the next day, and everything was going fine until we got here to this first day that broke down below the 10-day. And what was happening that day? The Fed meeting. So you can take data and events that are happening and combine them with the simple moving averages and sort of get yourself a really great advantage of knowing what's going to happen next. So here was our first trading day, back down through the 10-day, but we came back, recovered it, but nothing was the same after that. We began to print a couple of down days in a row. Here was our first close below the 10-day on around September 23rd. And from there on out, we never closed back above the 10-day after that. We just continued to see the 10-day roll over and roll over. And then here was the chart as of the close last Friday, not yesterday, but last Friday. We had put in 1, 2, 3, 4, 5, 6 closes in a row at that point below the 10-day simple moving average, and we had just put in our follow through, our second close in a row below the 20-day. This is not a situation where you buy the dip. Even though we came down this day and poked down through the 50-day, and really drew back and came back off of that low, that looks like it would be a great buying opportunity. But why is it not? Because look at what's about to happen. This 10-day simple moving average has completely rolled over and is getting ready to cross down through the 20-day. And I warned you guys about this as it was happening. That was the theme of last weekend's post, was that we were going to come into the day on the first trading on October week 1, and we were going to come in near a bearish cross of the 10-day down through the 20-day. We were either going to be right near one or we were going to be pulled into one on Monday's open. So here was the chart as of last Friday, and I was saying that I thought that we were going to probably come in the next week, re-break the 50-day, and at least double down that move. The move from the highs that we had been making to that break of the 50-day and doubling it down would have taken us to 29.10. Flash forward a couple of days. Here was Friday, here was Monday, here was Tuesday. On Tuesday's open, so Monday we came in, we kind of traded an inside day, which I said, either we were going to come in and make an inside day and then follow through to the downside, or we were going to come in and we were going to gap up open to try and fend off this bearish cross, or we were going to just come in and we were going to just anticipate this bearish cross was coming and we were going to sell off. We wound up with the inside day on Monday, and then on Tuesday we opened in this bearish cross. You can see we opened right on it. We tried to make that fending off move, that move up above it, but it failed. We got that ISM manufacturing PMI data, and we just pushed lower. We broke down through the 50-day, and this time we closed below it. And we closed below the low that we had set on that previous Friday. It was our first trading day of October. And then I reconfigured the measured move to go from this high that we had made on the first trading day of October to the break of the 50-day, and I reconfigured down to what I thought would be, a measured move target, just something to shoot at, a double down to 29.03. So that was the theme of the notes going in there. Here we were, flash forward a couple of more days. Here we are, 2 more days forward at Thursday's close. Sure enough, okay, here's what we did on Wednesday. We gapped down, open back below this 100-day. Sounds familiar, doesn't it? And opposite of what had been going on, what had been going on here between the first and the second trading days of September. Our first and our second trading days of October was a breakdown through the 50-day and a close below it, and then our gap down below the 100-day simple moving average. And as for that measured move target, we more than took that out. Here's where the measured move target was here. We actually doubled down from there. On Thursday, we came in and we gapped down one more time. Why? Because we have our 10 and our 20-day in a bear cross, and we had this coming our way. And as we got into the day on Thursday, I said, we're probably going to need to put in a bounce here and get a bounce going, because otherwise we're going to come into around Friday, and we're going to have this 10 and this 10 and this 50-day simple moving average just about ready to meet for a bearish cross, and that's going to produce an even stronger sell signal, and we could really have a crash-like move on that if that's allowed to happen. Because of all the data that had been coming out, because we had been getting, evidence that we're having a worldwide economic slowdown. We have really no faith that we're going to get a trade deal. Plus, we have this impeachment scandal going on. So we have lots of data and lots of negativity and reasons to take money out of the market, to take risk off, compiled with these simple moving averages, proving it to us, because this is showing us that the average closing prices are sinking down below. The faster ones are sinking down below the longer term ones. And that's what creates these crosses, and that's what creates more uncertainty and more risk-off behavior, and it all feeds on itself. And then these algos that are being written are watching for these behavior patterns to happen through the simple moving averages. So anyway, back on point here. Here we were at the end of the day, Thursday. We had bottomed out, made our low thus far. I should say 28.55, not 29.55. But anyway, we made our low. We rallied back to close more than halfway back on the day. You can see here. We rallied back to take back our open, and then we doubled up on the day from there, actually, because here was our close up here, and it was well above the halfway back of the previous day. So things were looking good. Things were looking very bullish for the next day. I had very good faith that we were going to follow through on this, because we had to. because if we don't follow through on this on Friday, we were gonna wind up with a bearish cross to start our week on Monday for sure, the following week. Okay, so flash forward, here's what our day was on Friday. So through the powers of just reading what the simple moving averages were telling me, I was able to tell you that, you know, get out of town here because we're going to have a bearish cross down through the 10-day down through the 50-day. And I thought that would, first I gave you a measured move of 29.10, then I gave you a measured move of 29.03, and even that wasn't good enough. We got our third day. I think we got our third day all the way down to 28.55. So I might not have, I don't always give you the exact target that we're going to make, but at least I gave you the right direction. And even looking at those targets, I'm sure you were like, no way, Carolyn, we're not going that low. Sure enough, yeah, we did go that low and then some. And then here we are on Friday, gapping up open, going through the 100-day. That took us, you know, through the European close to get that done. And then on our own, the rest of the day, we just kept grinding higher and higher. And then at the end of the day, we took out this 50-day. And then at the very high of the day, right before the close, we touched the 10-day simple moving average just below it and came back to close just below it. And you can see what this strong rally of 2 days did. It kept the 100-day on its trajectory, and it kept the 200-day on its trajectory. But look at what it's done to the 50-day. It's taken it and it's flattened it out a little here. Okay, and it's taken the 10-day and it's sort of flattened that out as well. So what we have to do next week, we have to follow on with this. We can't sit there and say, you know, I think that we've come a little too fast from the low that we set last week. It's a little overzealous, a little too much of a bounce. We need to pull back from here. No, we don't need to pull back from here. In fact, we have to put in day 3. We have to move up at least in between the 10 and the 20-day, and we absolutely must close above the 10-day on Monday. Because if we don't, we're probably going to roll over one more time and at minimum back test this low that we put in. So just knowing that information, knowing that we're on a right track here where the trajectory is changing on the 10-day, the trajectory is changing on the 50-day, and one more rally, even if it's just a little bit of a rally that just floats us in here on Monday between the 20 and the 10-day simple moving average, is going to help us out, you know, immensely. It's going to continue to flatten this out, and it's going to wind up turning the 10-day simple moving average up. If we come in on Monday and we rally and we take out the 20-day simple moving average and close above that, that is very strong. That is a very strong move. In my opinion, if we can do that on Monday, this market wants to go after a new all-time high before it will ever go back and retest this low. Okay? It might take it and get shy of the September high of that 30.22 and come back and test the 20-day. But by that point, the 10-day will have moved up. It will have crossed back up through the 20-day. And when that event happens, that will be a big buy signal that will power us up. That will be like a 50-point up day. Trust me, that is what will happen. Maybe not 50 points, but you know, like a 40-point, like what we saw here on Friday. This was 40 points from the low to the high, or actually 40 points up from the previous close to this close on Friday. Okay, I hope that all made sense. And once again, when you look back at a chart of a daily chart of anything, and this applies not just to the S&P 500, but if you trade Apple, if you trade Tesla, if you trade Boeing, look at a chart with the SMAs and you will see this. Okay, here it was August. Our 10-day crossed down through the 20-day right at the beginning of the selling, and boom, we got most of our selling in right in that first part because the 50-day and the 100-day simple moving averages were pulled so far apart because we came up so fast in July. There was so much space between these simple moving averages that it took a long time, and a lot of selling already was under our belt before we crossed the 10-day down through the 50-day. So we were able to just come back up here and bounce and try to fend it off, but we had already really put in a good leg of selling, so all we did was chop, 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 but we made higher lows. When you look back here to the sell-off that happened in April, the end of April, beginning of May, here's where the 10-day crossed down through the 20-day, and here was a leg of selling, and we tried to make the bounce to fend off the cross of the 10 and the 20-day. Here we did, we completely failed to take out the 20-day, and we couldn't take it out. Once we crossed above the 10-day, we couldn't take out that 20-day within the next 2 sessions, and boom, we fell down, and we pretty much put about another 50% of a leg down from what we had made from the high to this low. If you broke that in half, you can see it be about that much space, and you can see that's about how much further down we went before we finished we bottomed and we moved up. And that was our June low, this infamous 27.28 that we don't seem to be able to get back to. If we go over here to Q4 2018, look at this, okay? Here was our all-time high set the end of September. Here was our failure to make that new all-time high. Here were the breaks down below the 10 and the 20-day simple moving average and the bearish cross. And boom, we got that first leg of selling. And we got that first leg of selling, and then that 10-day also crossed down through the 50-day. Boom, we got some more selling. We tried to make a little bit of a bounce, but things were just on that plan. We were just on the way down. And this was where we wound up doubling down and doubling down again and doubling down again. And when you look at price here, look at how price never really recovered the 10-day until from the time it was lost here on October 4th of 2018. Here was our first attempt to regain it, was on October 31st. So at the beginning of November, we tried regaining the 10 and the 20-day, and we even made it up to close to the 50-day. But look, you can see how this loss of the 50-day was never regained. It was this one-off single regain. This was the G20 meeting on the first trading day of December. And everybody had a lot of hope and a lot of faith that maybe we were going to have our December rally. But that G20 meeting prevailed in nothing for us. And we rolled over, lost that 50-day again, and then look at this final blood-curdling leg that we took back down through. Here was like a twisting pattern. This was like stomach churning here. I remember trying to trade this like, oh, we might make a bullish cross. Oh, no, we're going to make a bearish cross. And sure enough, that was it. Okay, I don't want to drone on longer and longer. You can look at a chart yourself. And like I said, take it against any security you want. Take it against oil if you want. Take it against gold. Take it against Boeing. Take it against Pfizer or Apple, whatever. And you'll see that this is the one common language that we all speak as traders, and this can give you invaluable information that will help you place your trades in the right direction and make your plans in the right way. And anyway, I hope before this video gets any longer, I hope this helps you out. Please read that article that accompanies this video. And let's get in here next week. And if we want to sell off further, we're gonna see a failure of the 10-day simple moving average. We're not going to see that move to try and take back out the 20-day and move on up to a new all-time high. And we're going to wind up coming down here and breaking this low and probably even possibly doubling down this entire move that we've made from the high to this low last week. Okay, that's it. Have a great rest of your weekend.